What's going on, everybody? My name is Baloo and welcome to the jungle. This is the channel where we take a very simple approach to technical analysis. We look at the price in the context of volume using the Wyckoff method. So if that is something that interests you, then why don't you hit the subscribe button? I do this every single day except for the days that I don't. So in today's video, I want to talk about strategy. I want to talk about a very simple trading strategy that you can employ in your everyday use for those that are wanting to kind of maybe learn to extract some profits from the market on a day-to-day basis. So this would be kind of geared towards the day traders or the intraday traders. So basically what I'm going to do is I'm going to kind of take my take on a strategy that was developed by, shout out to Crypto Busy, who did kind of a moving average strategy as far that took trend and signals on the moving averages into account when looking for buy signals. And I'm going to kind of elaborate on that to kind of help you avoid some of the fake outs. One of the most effective things, or one of the most incredible things that the Wyckoff method has allowed me to learn is how to wait for confirmation and how to avoid fake outs. So I'm going to kind of talk a little bit about price structure, and then once you've established good structure and trend, you can then employ this method for gaining entry into an asset that you're looking at. So first off, I just want to draw your attention to your watch list. So let's just go over into our watch list here. Right now, I've created a Binance futures watch list, and basically anywhere where there's a futures contract, I have added that asset to the watch list, and that allows me to quickly siphon through a lot of the coins that have been performing and try and find one that is in a nice trending environment. So starting off at the top, we got Bitcoin. I think Bitcoin's in a consolidation. This is going to bring along some interest into the altcoins, so we're going to pass on that. Dominance doesn't help us. Ethereum is looking good. We got a nice trending environment on Ethereum. So when looking for the trend, the higher the time frame, the better. So 4 hour on Ethereum is looking good. If we just take a look, you can add an indicator called zigzag. So just go to your indicators tab at the top here and go where it says FX, or it might just be a symbol, it might actually say indicators, and then you're going to type in zigzag and you're going to look for the zigzag plus plus. So zigzag plus plus. This one will add a whole bunch of noise to your chart here and a bunch of nonsense that you don't really need. So what I do is I go to the drop down menu. You can see sometimes here by the ticker, you just click that, go into zigzag, click zigzag, and then go to the gear icon so that you can change some of the settings. Go ahead and get into the settings. I like having the labels. I don't like having the lines. Go to the inputs. I don't like the background, and I don't like the buy sell colors, so you can also change the colors of those labels if you do so. So color, let's just go with yellow. I like yellow, it's neutral. And we'll give repaint lines, just allows you to kind of have a tentative label. So if you're new to this, a high doesn't confirm as a high until it reverses direction, so repainting levels just takes that most recent one away. But if you want that recent information, you can leave the repaint levels on and it'll give you a tentative label. You know what, let's just leave the tentative labels off. We'll only keep the confirmed labels. So if we are taking a look at the structure on Ethereum, you can see we have a higher high, higher low, higher high, lower low, a little bit of a shakeout, higher low, higher low, lower high, higher low, higher high, lower low. So, it's kind of got some inconsistency, and we can also see that the price action is quite flat. So let's go and try and find something that's trending a little bit better. So this one looks okay. Let's go with 1 inch here. Could be running out of steam, but we can probably back test the theory here. So we'll just go ahead and do that. We've got a higher high, higher low, higher high, higher low, and we have our higher high here. So we're trending in the right direction. Now, considering that we have a higher high, we might be coming down for a higher low, but let's just kind of go over the theory and back test what we have on this chart so that you can kind of get a feel for what the signal is telling you to do. Again, very important to look for price structure. Very important to try and identify the trading range and look for a breakout of that trading range. So let's just very quickly just identify a range here. So we had this sideways trading range. We have the high, comes down to the low. We had a breakout with a little bit of consolidation here, got a spring off of that, and we're now trending back out. So this is kind of the break of the trading range. This is where you would want to enter, but let's just grab a couple indicators here. So what you're gonna do is you're going to go to 3 EMA. Okay, so you just type in 3 EMA. This is good for those that are on kind of the lower than pro accounts because you can get 3 indicators in one. You can use 3 indicators, but for the purposes of this video, you know what? We'll use 3. We'll use 3. I'll show you which 3 we want to use. So go to the 3 AMA. Let's just clean the chart up a little bit. I'll just turn zigzag off. And we're going to go to 3 EMA and we're going to go to the settings. Okay. The first one's going to be 10. So we want the 10 EMA. The second one's going to be the 20. We want the 20 EMA. And the third one is going to be the 150. Okay. And then we're going to we're going to look at the signal lines. So let's make this gray. And we will have our signal line be white and our trend line be purple. I'm okay with that. Let's make this a different color. Let's make this orange. Yellow. Personal preference, entirely up to you. So now we kind of have this trending environment. So this is going to be an intraday trade. So you want kind of the smaller time frames. I recommend either the 15-minute, the 1 hour, or the 5 minutes. So if we go on to, let's go with the 5-minute. And if we zoom in here, you can see there we go. So our yellow line is kind of our macro trend line. So we can just go into there, make it a little bit bigger and make it a little less bright. Okay, there we go. So basically, when the price is above our trend line, our macro trend line, the yellow line, this is a bullish trend, and we can then look for our entries on the smaller EMAs. We don't need the watch list here. And then conversely, when the price is below, that's typically a downtrend. So you can see the price action below here. We're kind of in a downtrend. We try to break up a few times, but all of the buy signals in this area result in a fake out and a downtrend. Now, when you see this where you get quite a divergence from this trend line, that's a very good opportunity. When there's a lot of space in between these moving averages, this is indicating an oversold condition. So oversold conditions can actually be quite a favorable trading environment in the short term. So what you're going to want to do is you're going to zoom in and watch for the cross, okay? So we have the yellow signal, or the white signal line, or the white signal line crossing over this purple trend line. So here is the buy signal right here. Let me just highlight that candle right there. So this candle right here is our buy signal, okay? Now you don't buy on the buy signal. It's your opportunity to pay attention to the move. So this is the signal. This is telling you to look for an entry. And what you want to do is you want to look for a pullback either to the white line here, or even better, down to the purple line below that. So there was a signal immediately after, or there was a buying opportunity immediately after the signal here on this candle right here on the 5 minutes. So let's say you were to buy this candle here, or you would buy the bullish confirmation of this candle here. Let's just pull up our measuring tool. Let's say you kind of got in around, well, we got our bullish confirmation, and then you bought the lower end of this red candle. You kind of want to buy the red candles. You want to get as close to these EMAs as possible when you're buying. So let's say we bought the bottom of this candle right here. We're going to take a measurement from there down to the local low. So that's about an 8% move down there. So this is our local low. You can actually just mark that level with a horizontal ray, and we can call that our stop loss. Or if you would like, you could go to the next one down so that this low does not get triggered. If this is the support, we'll label that support. This is support. You want to place your stop loss below support. So we got our signal, we got our bearish candle, we got our signal, we got our bearish series of candles, we got our bullish candle, and then we got our entry candle on this red candle. So from that entry, we have about an 8% move down to support. So we'll just probably say that it's about a 10% move down to your stop loss area. Now, if you were trading contracts, which I don't recommend that you do if you are a beginner, but usually these shorter term trades are kind of geared towards those who are purchasing futures contracts, or those who are working on a margined account, a leveraged account. Because the stop loss is at 10%, you have the option to kind of either enter the position with strictly your stop loss and leverage up, or you can take more of a small leveraged spot kind of position, 2 or 3x, and that would translate into 20 or 30%. So it's entirely up to you. Whatever you want to lose. Like if this was me, I would probably take a position that would be my stop loss. So whatever amount of money I'd be willing to lose, I would put into this trade at 10x, because 10% would liquidate that position. But since the position itself is my stop loss, that's how I would handle that. Now, from this point forwards, this is our entry. So let's just get, if you go to the left-hand side of your toolbar here, you have long position. So let's just grab long position. We grab it at the close of that bearish candle. We pull our stop loss down to our stop loss level right here. And then we're going to see what the profits would have been inside of this position. So basically what you're looking to do is you're going to ride the trend. You're going to ride it until you get a bearish cross. Now, the bearish cross, considering that we were in the oversold condition here, me personally, I would have held a little bit longer because we would have been oversold and we would have needed to shake that out a little bit. So we would have been below the trend line, the macro trend. We would have gotten above the trend line. I would have personally ignored this cross and held on, because I think that it's an oversold condition, therefore it's an overcorrection, and we continue to trend up, and that is exactly what happened. A lot of this is practice. You need to kind of, you could take that exit, right there, and that still would have yielded you a 5% gain, but the risk to reward on that is not very favorable. You want to shoot for at least a 3-to-1 ratio on your risk to reward. So not a great risk to reward ratio for that trade. I would have just let that one ride and wait for the oversold condition to confirm bullish. So that happened up here. Right about here is where we got the bearish cross. And how long you hold these is entirely up to you. Again, you need to decide upon your strategy when you are entering the trade. But if you took the next bearish cross, you would have a 16% move, and you've got a 1.8% or a 1.8 risk to reward ratio on that. Not bad. But looking at the trend on 1 inch, you can determine that we're kind of in a very favorable trending environment right now. So you could go on to higher time frames to confirm your bias. So here on the higher time frame, yes, you got a bearish cross here, but you also confirmed your bullish cross on the 4 hour. So you might want to see if your position could endure that bullish cross and see if you could hold it for a little bit longer. And from that point on, once you have an entry with a little bit of a buffer, you could just ride the higher time frames depending on your strategy. 1 hour is a very good intraday time frame. You could ride the trend of the 1 hour until you get the bearish cross. So here on the 1 hour, we still have not even confirmed our bearish cross, but let's say we get a bearish cross and we're expecting a bearish cross and we're happy with this. This would be a 55% move with a risk to reward ratio of 6. So very good for a day trade. Very good for an intraday trade. This is something that you would absolutely be happy with. You might even exit at 3 to 1. Again, this has not confirmed yet, so we would tentatively be seeing this potential cross coming down, and you can either just let the stop loss decide where you exit the trade. So you could actually just drop a ray at this low right here, move your stop loss to somewhere below this ray, and then see if the price action stops you out of the position into profit. Or you could go down to the next position and turn this into a little bit more of a swing trade. So you can do what's called a trailing stop loss. So let's just clean this up a little bit, remove some of these indicator, or remove some of these drawings right here. Let's say you got a solid entry and you were liking it. You would then have your stop loss. Do I have a stop loss? Nope. Stop loss. So your initial entry has your stop loss below the local low. The entry is going well. You can then start making notes of those lows. So we can take some of the, we can throw the zigzag back on. And then here's our local low here. We can even turn it on to get that tentative low. So go to your settings, inputs, repaint levels, and you can get your tentative highs and tentative lows. And then we just drop a line at that low. So now we are moving on from this position. We have come along, we got our good entry, and we got to this low and we continued the trend. Once we get confirmation of a continuation, which would be a break above the high, then you could move your stop loss. Oops, don't need that there. You could move your stop loss up to the next level of support. Then we have another low here, even though it's not labeled. That's why it's good to just kind of learn how to see these things on your own. And then you can, once you get a confirmation of the break of the trend, move your stop loss higher. Now, what do I mean by confirmation of a break of a trend? So let's just say here's the breakout level. We'll call this breakout, and we'll call this support. So here's our support. We will label this yellow, and we will label this one green. So when you have the pullback and you break through the resistance level in green, that is a confirmation of this local low. So this is, in theory, now becomes your local low. So when your stop loss was down below this low, waiting for this confirmation, we now got our new confirmation, continuation of the trend. We can then bring our stop loss up. Now we have a top, we get a reaction back down. We move our breakup level to the top of that reaction. Buyer's climax, automatic reaction. Now we're waiting for the low to print. So the low comes down. This is a tentative low. And then we reverse direction. We get a breakout. The breakout, you want to wait for a few candles of confirmation. So, on the 1 hour, you only have to wait an hour or two. for confirmation. It gave it back, so you're still waiting. Confirmation, 2 green candles, 2 hours later, we get a continuation of the trend. You then move your stop loss back up. So this is kind of like a trailing stop loss style if you were to do an intraday swing trade. So by this point, if you had a stop loss, we made our entry down here. And if our stop loss gets triggered, we made 15%. Now, if we get a continuation, which we do have confirmation, we have our local high in here, and we have our tentative low. So as you continue through the trend, you don't want to get too greedy. Once you start making some good money, be okay with exiting the trade. We're in profit, we're in good money. We've made at least 15% from where our stop loss is right now. Don't get greedy. We see that we have this trend. We see a weakening of the white EMA, and we look as though it may cross down onto the purple EMA. So just take your stop loss and move it to the local low. If the trend is to continue, it shouldn't break this line. If it does break this line, it should break it with a lower low. So we're exiting the trade with good profit. And that's kind of the method that I like to use. So we had our break here, got our profit up there, and now 26%. That's a fantastic trade. Very good intraday trade. Anyways, that's kind of the method. It's a very interesting style to kind of use the EMAs, but again, take trend into consideration, take the trading range into consideration, start on the macro, and make sure that you are in the right environment to have good follow through on this method. I hope that helps you guys. I really want you to, have these tools to your disposal. If you're new here, please subscribe. I usually do breakdowns of coins and different projects and what I see as far as value in different assets. So typically, I'll get comments. You can leave the project that you're interested in the comments section, and I will review the technical aspects of that coin. But I just thought that, there is quite an appetite for people to be able to make money short term in this trending environment. So using some simple strategies here and there while you are learning how to invest and how to make better trading decisions, I think you can play along with this method quite well and get a lot of value and some pretty good trades, especially in the environment that we are entering right now. So anyways, that is all the time I have for today. If you enjoyed the content, please leave it a like. Don't forget to subscribe. And if there are any projects that you would like me to take a look at, leave them in the comments section down below. I would also like to invite you to sign up for the free newsletter. So I am actually a writer for the Arcane Bear. I'll leave his YouTube channel down in the description as well. So you can go ahead, join the free newsletter on the Arcane Bear, and you can get some of these charts and setups that me and Tio are looking at. And if you're interested, join the private bear den where we can answer a lot of these questions and help you with some of these trades in real time. So with all that being said, please trade safe. It is a jungle out there. Peace.